Hello, Colorado real estate investors. It's Marc Cunningham at Grace Property Management. As we enter 2025, the same thing happens as always happens early every year. Is we have a lot of clients, potential investor clients, contact our office, and they're excited about buying investment real estate in 2025, and they ask if it's a good idea and where they should buy. And we kind of go through some of these same conversations. But one of the things we're talking to investors, our current owner investor clients and prospective owner clients right now. And if you own rental real estate or you're thinking of buying rental real estate, you need to understand some of the true cost and the cost increases of owning investment real estate in Colorado in 2025. So let me share with you 5 specific expense categories that are uncontrollable to some extent, but that you need to be very, very aware of because they're increasing. Number one is we all understand you've got your mortgage. Now, interest rates are up the last couple of years. They're ticking around, and this is the most straightforward one. But yeah, that's fixed. If you have an adjustable rate mortgage, we'd recommend maybe you lock that in so that you can at least know what to expect that to be over the course of the annualization of the loan. So not a big deal there. We all know that one. But what about property insurance? In the last year, the best data I can find online is that in Colorado, the average property insurance bill increased 30% in 2024. Now, a lot of locations, depending on where they are geographically, increased more than that in 2024. But 30%, and that's after several other years of increases after increases after increase. We're seeing that continue. We expect in 2025 we will once again see an increase in insurance. That's not something that's real controllable. Sure, you can call around to other insurance companies, but oftentimes a new policy to add on is going to increase your cost even more than what you were paying with your current company. So that's just a fixed expense. You can't do anything about that. Expect that to increase again in 2025, and you have to have that. You need to have property insurance to cover your general liability for your property, if it's a rental property. Number 3 is if it's within an HOA, you've got HOA dues. HOA dues this last year typically increased. Now, there's no average increase. You find anything from a couple bucks. I've seen all the way up to like a 300% increase in the HOA dues year over year. Not only are you seeing monthly increases, but oftentimes some of these complexes are putting in place special assessments. So they'll get a big bill. Maybe their insurance for their building, for the complex, dramatically increased, and they don't have the reserves necessary. So suddenly you get a special assessment. They'll send you a bill in the mail and say, gosh, we've had a special assessment for all of our owners. You need to pay a one-time fee of $1,500. I own some properties that are in condo complexes. I've had those special assessments. Those continue to increase, and that again, there's not a lot you can do to adjust that expense if you own the properties. Number 4, property taxes. We can't get out of this one, can we? We are anticipating, from what the data is showing, about a 36% increase in 2025 on property tax bills over where they were last year. And there's a lot of talk about that. And this, again, is very property specific. All these things are a little bit property specific. But on average, that's what you can expect to see. So suddenly you look up and you think, gosh, my property taxes have gone up by 36%. My HOA dues went up by $100 a month. My property insurance is up by 30%. Gosh, could it get worse? Is there more? Well, unfortunately, there's the unknown capital improvements and repairs. Now, this is more controllable, absolutely. But when a property turns over, when a tenant moves out of a property, one thing you can expect to spend money on are capital improvements. Capital improvements mean things like new carpet, new paint, maybe a new refrigerator. Does it need some new cabinets? The money you put into the property to bring it back to a high quality rentable position. The costs of those things have increased dramatically over the last 5 years, especially during COVID. What we're paying for carpet install right now is literally twice as much as we paid maybe 6 or 7 years ago. Twice as much. Paint, same thing. Plumbing, HVAC, those types of things. And that's just not capital improvements, but same thing for repairs. To send the handyman out to fix the clogged sink is much more expensive than it was 6 years ago because the costs for the handyman service are going up. They have to pay their people more. Their insurance is going up. They have all expenses, and this is just the result of inflation. So we see all these things going up. Now you think, well, not a problem because I can offset that by rent increases, right? Well, Unfortunately, not in the current situation here in Colorado. Rents are flat to declining in many property types in Colorado. So while you have 36% increases, 30% increases, your expenses are going up dramatically, rents are expected to increase in Colorado on average next year around 5%. That doesn't even keep up. It doesn't come close to keeping up with the cost increases. So what do you do about this? Well, what we recommend to our owner investor clients, if you work with us, we recommend that you have a very specific risk assessment analysis that you do, and we are happy to do this for you on your property. You have to step back and look at the property specifically as it relates to three categories to determine, gosh, is this a good performing, is this a financially performing property, or should I consider converting it to a better performing property? And there's a lot of different things to look at, but three specific things that we think are the most important to look at is, number one is the property type. The property type. What we recommend our investors invest in for the long term are single family homes for a couple reasons. Number one, your turnover is about half as much as it is as compared to a condo or townhome. Why? Because people that move into single family homes are typically families. Families don't like to move because they have the backyard and the dog has the backyard and they don't want to pull their kids into a new school. As compared to the one bedroom condo, which is typically a single person living there, and they're just going to move more likely. That's just what the stats show. Condos and townhomes turn over much more often than do single families. So you've got that turnover expense suddenly that's coming in. With condos and townhomes, you have HOA dues that you typically don't have with single families. So over the course of time, what our data has shown is the financial return on single family properties is greatly higher than other types of properties. Now that's not the only thing. Property location matters as well. We've seen that the best financially performing properties are typically those located in the suburbs. If I'm going to buy a property today, I'm going to be looking for a single family home in the suburbs. And then the third category as well is the age of the property. This has never been more important than it is today in 2025, we believe, because of the biggest expense we talked about, which was capital improvements and repairs. I could guarantee you no maintenance costs on your investment property for the next 4 years. I could guarantee it. What you would need to do is buy a new construction property because everything's under warranty, and if something breaks, the builder's going to cover it. Now, if you run numbers, you say, well, Mark, I don't think the numbers really pencil out. Rent rates maybe aren't quite as high, and you pay more for the property. But when you factor things like this in, the fact that you'd have zero maintenance for literally years, which is the truth, suddenly it equals out. So what we're recommending to our owner investor clients, find a single family in the suburbs that is either brand new construction or at least very, very new, built within the last couple of years, because your maintenance costs for the next decade will be a fraction of what they will be for that property that was built in the 60s or the 70s or maybe even the early 80s. If we can help with that, we're happy to give you a risk assessment on your property, help you determine the best way. The days of just buying any rental property and it going up in value and attracting a great tenant and having a great experience are behind us. The market in Colorado right now is too segmented. You have to be wise where you invest. You have to be wise how you spend your money. We can certainly help you do that because we manage thousands of properties and we know what pencils out the best. Jump on our website, rentgrace.com. Happy to be a resource if we can.